Good morning. Welcome to World Economy. My name is Blyden Ukem. In World Economy today, India and China resume flights and boost trade amid global uncertainty. Trump widens a metal tariff on hundreds of goods. UK inflation hits 18-month high and rose to 3.8% in July. Plus, Japan exports drop the most in over 4 years. These and many more we'll talk about on World Economy. Welcome to World Economy. India-China resume flights and boost trade amid global uncertainty. India and China have agreed to resume direct flight and enhance trade and investment flows as part of efforts to rebuild ties strained by the 2020 border clash. Against the backdrop of US President Donald Trump's unpredictable foreign policy, both nations are cautiously improving relations through high-level visits. The Indian Foreign Ministry announced plans to reopen border trade at 3 designated points and ease visa processes, though no date was given for flight resumption. Meanwhile, Beijing confirmed a follow-up meeting next year in China. Prime Minister Narendra Modi is set to visit China later this month for the Shanghai Cooperation Organization Summit, his first trip there in over 7 years. Meanwhile, the United States Commerce Department widened its 50% steel and aluminum tariff to include more than 400 product categories, including auto parts, chemicals, plastics, and furniture companies, the furniture components that contain the metals. The levies now extend to 407 new products categories, the Department of Commerce said. Multiple observation indicates that a new tariff took effect on Monday. Today's action expands the reach of the steel and aluminum tariffs and shuts down avenues for circumvention, supporting the continued revitalization of the American steel and aluminum industries, said the Secretary of Commerce for Industry and Security, Jeffrey Kessler. In the United Kingdom, the UK's annual inflation rate rose to 3.8% in July 2025 from 3.6% in June, the highest since January 2024 and slightly above forecast of 3.7%. The uptick was led by higher transport costs linked to school summer holidays, with additional pressure from motor fuels, restaurants and hotels, and food and non-alcoholic beverages. And now let's look at the charts indicating United Kingdom's inflation rates. The charts. Inflation in the United Kingdom as of July stood about 2.2% and a slope down to 1.7% in September last year, began to build momentum this year, reaching 3% and up, and currently at a standing point above 3.7% but 3.8%, indicating increase in terms of the cost of commodities in the UK and a slight struggle for the UK pound. In Indonesia, the Bank of Indonesia unexpectedly cut its benchmark interest rate by 25 basis points to 5% at its August 2025 policy meeting, following a 25 basis point cut the previous month and defying market expectations to hold rates steady. This marked the 5th rate cut since last September, bringing the benchmark to its lowest level since October 2022. The decision reflects projection that inflation for 2025 to 2026 will remain within the central bank's target range of 2.5% plus and minus 1%, a stable rupiah exchange rate, and ongoing efforts to support economic growth. A recent data showed GDP grew by 5.12% year-on-year in the second quarter, its highest pace in 2 years. Meanwhile, annual inflation rose to 2.37% in July from 1.87% in June, marking a 1-month high but still within the central bank's target range. Economic growth for 2025 is projected to be slightly above the midpoint of the 4.6% to 5.4% range at around 5.1%. And now let's look at the top 20 natural gas producers in the world according to 2024 reports. In 2024, global natural gas production was heavily centralized among a few leading players. The United States stood out as the undisputed leader, producing more than 1 trillion cubic meters, outpacing Russia by a wide margin. This reflected the U.S. continued investment in shale gas and advanced extraction technologies, which have made it a cornerstone of global energy markets. While Russia, while still a strong player, lags significantly behind the U.S., yet remain a critical supplier for Europe and Asia. Let's look at the top 20 natural gas producers in the world in 2024 according to the Energy Institute Statistical Review of World Energy. Well, according to the standings that's indicated here, at number 1 is the United States of America at 1.03 points indicators talking about a trillion cubic meter. Number 2, Russia. Number 3, Iran and China and Canada, on and on and on. Iran, Canada and indications from Canada followed, each are playing strategic roles in balancing regional supply and demand. Multiple observations indicate the lives of Egypt, Nigeria being part of this mix, looking at the top 20 countries. Countries like Saudi Arabia, Qatar and Australia also highlights how resource-rich nations in the Middle East and Oceania are shaping global energy flows. Meanwhile, emerging producers such as Algeria, Nigeria, Egypt, and they underscore the growing importance of Africa in diversifying natural gas supply. However, the production volumes were relatively modest compared to the top-tier producers. On the overall, these numbers show a mix of dominance and diversity, while a handful of nations control the majority of output. Smaller contributors ensure global supply resilience. And now let's go to an identification in Africa. Africa's urban population has been expanding at an extraordinary pace over the last decades, with the number of people living in cities growing from just 53 million in 1960 to nearly 700 million by 2025. This growth has not only been in absolute numbers, but also the share of a continent's total population rising from 18.7% in 1960 to a projected 57% by 2045. And now let's look at the share population in Africa residing in urban areas 1960 to 2045 rather, according to Worldometer. What this shows, as we see on the table, is a structural shift. More Africans are leaving rural communities for urban centers in search of better economic opportunities, infrastructure and services. We're looking at a trajectory that's taking place. By 2035, Africa is projected to cross 50%, where 1 out of every 2 Africans will live in urban areas. And the tipping point signals a future where cities will increasingly become the heartbeat of a continent's economic, social and political life. The rapid urbanization trend is already shaping consumer markets, driving demand for housing, transportation, energy and jobs, while also amplifying challenges like congestion, pollution and inequality, as you see from the table from 1960. Well, the number was 53 million of Africans in the urban areas, and it's increasing to 1.3 billion as projected for 2045. Currently within the mark of 2025, a number of Africans in the urban setup are about 690 million Africans. And so quite increasing movement from the rural areas to the urban areas, and this has economic impact in Africa. Meanwhile, an outlook at global population growth. Over the past 76 years, global population growth has reshaped the demographic balance between regions, with Africa experiencing the fastest growth. From just 228 million people in 1950, Africa's population has expanded by over 580% and reaching 1.6 billion in 2025, a number that is now more than double Europe's population. In 1950, Africa's population was less than a half of Europe's. Today anyway, Africa has overtaken Europe by a wide margin and is shaping the future of the global labor force, consumer market and urban developments. Let's look at global population by region, looking from 1950 to 2025 according to Worldometer. Well, Asia, at some point you could see Asia, the green line indicates the year 1950 and the blue line indicates 2025, talking about population growth. Asia was at 1.4 billion previously as at 1950, but the growth has grown to 4.8 billion, and that is 253.4%. Africa bloated out to 1.6 billion currently, and 580.4% has blown away the rest of the world in terms of growth indices, population growth indices. Europe, you can see at 549 million people, was ahead of Africa in 1950, but currently Europe is 744 million at a growth rate of 35.6%, not to be compared to Africa's growth rate of 580.4%, and the rest of the world as indicated on the table. This explosive growth points to both opportunities and challenges, from economic potential to infrastructure needs and sustainable concerns. Asia remains the most populated continent, growing from 1.4 billion in 1950 to nearly 4.8 billion in 2025, at 253% as we saw, as Europe has seen only modest growth of 35.6% over the same period, with its population rising from 549 million to 744 million. Other regions such as Latin America and the Caribbean, 298% growth, and North America, 131% growth, have also recorded significant increases, though none as dramatic as Africa. And now let's see why we're having this change of growth as we look at global fertility rates. The global fertility rate is dropping. Meanwhile, Africa's total fertility rate has remained the highest in the world over the past 7 decades, even as it dropped significantly. In 1955, Africa averaged 6.58 children per woman. By 2025, it is estimated to be 3.95 and considerably higher than any other continent. In comparison, every other region has fallen below 2.2 children per woman, with some, like Europe, far below that threshold. Let's look at the global total fertility rates by continent from 1955 to 2025 according to Worldometer. The decline, as you can see the variety in it, Africa represents the white line, and Asia represents a lighter green line, and Latin America the other green line, and we're talking of Latin America and the Caribbean, in North America the dark line, the black line, Oceania yellow line, and Europe the red line. But you see the line Africa, and the decline has been steepest in some region. For example, Latin America and Asia, which had fertility rates close to Africa's in the 1950s and 1960s, have seen dramatic drops, converging with non-America and Oceania around a 2.0 mark in recent decades. Europe, which started low, is now at just 1.41 points, but Africa high up there comparatively to the rest of the world, despite recent drop. And from the picture we're saying, Africa is projected to have fertility rate at 3.95 child per woman at the moment. And now we'll go on a quick break, and when we're back, World Economy continues, looking at the indices around the world. Don't go anywhere. Welcome back. It's your World Economy. And now let's talk about Japan exports, as exporting Japan drops the most in over 4 years. Japan's export fell 2.6% year-on-year in July 2025, marking the third straight monthly decline at the steepest pace since February 2021, worse than market consensus of a 2.1% decrease as the impact of US tariff intensified. Exports to the U.S. tumbled 11.4%, extending a 4-month slide due to weaker shipments of cars, auto parts and ships. Sales also fell to China, negative 3.5%, and the EU, negative 3.4%, and ASEAN countries, negative 2.9%. In April, President Trump imposed a 25% tariff on Japanese automobiles and auto parts, later threatening broader levies. A partial reprieve came on July 23rd when both countries struck a deal cutting the auto tariff to 15%, still above the original 2.5%, in exchange for Japan's $550 investment pledge in the US. However, autos, Japan's largest export sector, remain under strain, with car makers absorbing higher costs by lowering prices to sustain shipment. Analysts warn the burden may shift to US consumers, curbing demand and eroding Japan's market share. In South Africa, South Africa's annual inflation rate inched up to 3.5% in July 2025, marking the second consecutive monthly increase at the highest rate in 10 months, matching analysts' expectations. The key drivers of price growth were food and non-alcoholic beverages, alcoholic beverages and tobacco, housing and utilities, and restaurants and hotels. Moreover, prices fell much less for transportation, notably fuel. And now to the charts indicating South Africa's inflation rates this afternoon. The chart has shown ups and downs for South Africa's products and the prices of commodities, but not as high as last year's July, which reached 4.6%, before a slowdown to 2.8% in terms of inflation numbers began to go up, then dropped by 2.7 to 2.7% in March this year. 2025, consistent increase back to about 3.5% currently for July, indicating a slow intensifying cost of commodities in South Africa and a little struggle for the South African rand, but comparatively to last year, South African inflation is relatively low. And now let's look at global ginger production as India leads on this. Over 6 decades, global ginger production has been led overwhelmingly by India, which has consistently outproduced every other country by a wide margin. In 2021, India set a record with over 2.2 million metric tons harvested, more than triple the output of Nigeria, its closest rival. Despite the gap, Nigeria has emerged as the world's second largest producer, overtaking traditional players like China and Nepal. Yet, the global ginger landscape remains concentrated, with just 5 countries accounting for the vast majority of total output. Meanwhile, production trends have been anything but stable, with sharp year-on-year fluctuations, highlighting the sector's exposure to environmental, economic, and policy shifts. And now let's look at how Nigeria has emerged as the world's second largest producer, overtaking traditional players like China and Nepal, according to the structure we're seeing. Well, we've seen the growth for Nigeria in terms of ginger production, and now becoming the second largest producer in the world after India. And now to the markets, and let's look at the commodity markets and the price level of some of the biggest commodities in the world, from the energy market to the metals and agricultural commodities. And now the commodity markets. Commodity marketing begins with Brent talking about a crude oil rather. First, WTI crude oil and price level at $62 gaining 1.23% this morning, and we're talking about Brent, which represents Nigeria's price benchmark, and the price level standing at $66 per barrel, gaining 1.06 points. And natural gas also gaining, falling rather. Gasoline gaining this morning. Price of gold at $3,342 per ounce, upward by 0.77%. And now to the FX updates. Looking at the financial market, top currency losers, New Zealand dollar falling negative 1.5%, and South Korean won falling a negative 0.38%, Australian dollar dropping a negative 0.31%, and the euro falling a negative 0.03%. The gainers are led by British pound 0.13% appreciation, the dollar index gaining 0.05%, and Japanese yen gaining 0.1%. And now to the FX market, and see the price and the indices of the different currencies in the world. The FX market this morning. FX market indicates a price of US dollar against the Swiss franc at 0.8 point mark. The Swiss franc falling against the US dollar at 0.27%. Canadian dollar also falling against the US dollar. The Mexican peso also falling against the US dollar, negative 0.43%. Indian rupiah falling against the US dollar, negative 0.03%. The Brazilian real falling against the US dollar, negative 0.75%. The Russian ruble falling against the US dollar, negative 0.82%. And on and on and on and on is that conversation in the market. Well, let's see how we set to close in this one. Looking at the European stock market. Our European stocks declined today, with a stock 50 down 0.4% and a stock 600 off 0.3%, laid lower by defense names. While the stock Europe Aerospace and Defense Index fell another 0.9% after Tuesday's 2.6% drop, as optimism over Ukraine ceasefire weigh on the sector. Germany's Rheinmetall and Hatsoldt slid nearly 2% each, while the UK's Rolls-Royce and Quintic also lost around 2%. The weakest followed US President Trump's call for Putin and Zelensky to show flexibility and hold a bilateral summit, boosting speculation of a breakthrough in peace talks. As we close, let's look at global company stocks this morning. Global company stocks this afternoon. Well, the price of Tesla this afternoon stands at $327 per share. Tesla stocks falling by 1.46 points, negative 0.44%. Microsoft gaining 0.15%. Amazon falling negative 0.59%. Meta at $747 per share, dropping 3.91 points, a negative 0.52%. Nvidia gaining 0.09% in the market, and Visa falling negative 0.08%. And well, as a structure of global economic standings and the markets itself, and here we draw the curtain in today's edition of World Economy. I thank you for being a part of it, and thank you for watching. My name is Blyden Ukem.